Welcome to Next Steps for Seniors Conversations on Aging. I'm your host, Wendy Jones. And as you all know, I have such a passion for sharing information, especially as we age and just being prepared for life because we need to be prepared. And with us today is Merrick Maris, and he is the fourth. Okay, so that's exciting. He's from Farm Bureau and here to talk to us about insurance. And when I say insurance, Merrick, hi, how are you, by
Hi,
the way?
how's it going?
I'm
Thank you
so
for
glad.
having me
I'm
on.
so glad you're here today. So tell me a little bit about what Farm Bureau covers. Like when you say insurance, we're talking about everything, right? Auto, car,
Everything. So we at Farm Bureau pretty
same thing.
much pretty much everything but health insurance. We do have a health services division as well that handles the health insurance. Me as an agent, I do a lot of home, auto, umbrella, different things like that. Also, life insurance is a really big part of what we do. We're one of the biggest life insurance companies in America, actually, with being only in Michigan. So Farm Bureau does only service Michigan Farm Bureau. But we do everything, from businesses, small businesses, mid-sized businesses to just your everyday family with their life insurance needs and their home and auto needs.
And we're going to talk about insurance in general. So people need to know this information. So if you're in another state listening, just know that this is going to pertain to you also, because you can do research in your own state.
1,000%.
So, a lot of times when we have insurance, a lot of us are kind of like, when should we actually review their plans?
Yes, 100%. And I think, especially with these seniors or anybody really, it should be a annual thing that, you and your agent are sitting down and actually talking about what's changed, what's the same, and going, really, I like to go line by line so that everybody understands what they really have going on. One thing I don't like doing is just giving you a piece of paper that says, hey, you got insurance. You can drive, you can have a mortgage, whatever. So I always want people to actually understand what's on there, ensure this piece of paper that they were given. And also, just talking about different things that have happened in life, because if, XYZ has happened, well, then we need to, also do your insurance policy for that. So I say, if it's been more than a year, contact your agent, contact somebody that would be, open to sitting down with you and looking at your plan. And then every time from then, I would say annual on, after you've done your annual, do it every year, or when something in your life, really changes.
Let me ask you this question. I think this is how I'm thinking of insurance, and I think a lot of people might be with me on this. They think everything's always the same, like for your house, for example. Okay, homeowners insurance. Oh, they're all the same. I'm just gonna shop for the least expensive plan.
And
And I mean, that's what I think people think. And they're like, oh, I just need the least expensive
you're
one. And it's
seeing
all
that.
about the money. So tell us what really differentiates you and what are you looking for when you look at just for homeowners, for
Yeah, so
example?
for homeowners, it's, simple on the simple fact of what would it be to rebuild your home? So we always run a reconstruction report that's going to show us exactly using today's labor cost for materials, what your house is, what grade you have from builder's grade all the way up to luxury, extra luxury. So if you have these things, and then your house burns down, well, we want to make sure that you're covered for those luxury oak floors. We want to make sure you're covered for everything, all the modifications you've made. And that's why it's so important to do an annual, because if you completely redo your kitchen from the
Right.
last time you talked to your insurance
There's an
agent,
extra 50
yeah,
grand.
it might be a little different. So, just really sitting down, we live in a world where a lot of people are going online now to get their insurance, and
Yeah, the answer is not in Google, just
it's
FYI.
not in Google,
Yes.
and it's not in some algorithm where you can put in, XYZ and it'll spit out a number. That may work and that's a great start. But we want to know, how does that compare to what it would actually really be? So that's where it goes to, sit down with somebody. I always tell people, get a person. There's a difference between, going online and getting, like I said, just a number spit out. But when it comes to homeowners too, your liability, if something were to happen at your house, you want to make sure that you're covering your assets. And I think, that would go to this audience where you've worked so hard in your life to create, so much accumulated,
The
money.
last thing you want to do is have a problem now.
The last thing you want to do is have a problem now. And what people don't understand is cost, it's pennies on the dollar for how much coverage you're really getting. For an extra $1 million
Right.
of coverage, it's $12 a month. So, I always tell
Well, that's a
people,
perfect example. Is it worth it? Yes.
100%. I always tell people, do you want me to save you money in the event of a claim, or a couple dollars on your premium? And I think that's the trade-off people really need to have.
So, what would you say is the most important coverage every day? Home, auto, home and
Truthful
auto too.
home and auto, it's more the coverage on those policies that are so important, and that is the liability coverage, truthfully. And it goes to that $1 million umbrella or whatever it is. But basically, we see all of these billboards all over, posted with, have you been in a car accident? I'll get you your money. What, I've injured in a car accident, whatever that is. Well, your auto liability is going to cover the payments and the lawsuits and all of that to the other person
If something were
if
to
something were
happen.
to happen. So I always use the example, in the world we live in now, you drop your phone and you go to grab it and accidentally go over the yellow line, hit somebody, very injure them, or unfortunately, they pass away. Well, that family is definitely going to be coming after you, just truthfully based off principle. And that's when
Right.
you see all these people on the billboards and things. So your liability coverage is protecting you in that event. So when you, get sued, get in a car accident, whatever it is, they're going to go through all of your assets. Those lawyers are scheduling out everything that you could, possibly have.
Mm-hmm.
And then they're going, okay, this is what we can sue them for. So your liability limits should match up to what you have. So if your assets are 2.5 million with a home, 401k, all of these different things, investment products, life insurance, different things where you're worth, X amount of money, you need to make sure you're covered for that X amount of money. So I have people come in sometimes, especially actually in the, 60 to 70 range, where they've, about to retire,
Accumulated. Yes.
accumulated so much money where they're like, well, what do you mean? I have $100,000, $300,000 limits on my auto policy. That's a lot of money. I'm good. I'm like, yeah, but you're worth 2.5 million,
So you're not good. If something were to happen, you're only going to get that.
these big numbers sound great, but if these big numbers don't actually match what we need, it doesn't mean much, so that's my biggest thing. When I talk about the most important coverage, it's because the biggest thing we see bankrupt families is not having correct liability limits.
So
That's why it's,
liability limits. And I honestly don't think anyone's looking at that. I'm being completely honest
and
right
that's what
now.
scares me as an insurance agent. I've been at
And the older
things
you are, the more you've accumulated, and I'm sure you would
100%.
need.
And, when I've talked to people who have asked me, truthfully, and, I live in a world of insurance, so I get it. But some people are like, what is that big number? Do you believe in that? Is that something I should have? What am I paying for that? And I'm like, that's the biggest thing you are paying for. Because if something were to happen, that's going to protect you and your family and your legacy, with everything that you have put together. So, even if it's a small, young person in their 20s who haven't accumulated a bunch, well, your home is worth money, your future
You
income,
also don't, you can't afford to lose it either.
you
So
can't
there's
afford to lose it.
that.
Exactly. So it's,
So,
definitely something that for anybody getting insurance, please take a real good look. And I always ask people, how did you get to this number? And most of the time they
they
don't
don't
have an
know.
answer.
Mm-mm.
So for me, when you come to my agency or whatever, any insurance agent that's going to take a detailed look should really be taking the same detailed look as the lawyers would take, because that's going
Right.
to be the same thing.
Right. So, Merrick, let me ask you this question. When you think of seniors, and this is just that I know this happens, once they retire, they kind of go down to one car and they're sharing it. So the husband and wife are sharing the car because, they don't both need a car. They're not driving to work every day and they're driving less miles, less and less as they age. Aren't there different policies for seniors? Like, I just feel like it should be
Yes.
less, not more. I don't know. Talk to us about that.
100%. So, with Farm Bureau, we usually rate our drivers, based off business use. If you're somebody who's, going out using Uber or DoorDash, or even me as an insurance agent, I carry business use because I'm driving around so much for work.
Mm-hmm.
And then there's drive to work or school, which is our everyday commute. So then, you'll be based off how much you drive. Then with, retirees and seniors, we're not going to rate you the same as somebody who's commuting, 45 minutes
To
or
work every
even
day.
5 miles to work every day. So we're going to insure you as a pleasure use driver. And that is extremely discounted to the other two options. And the reason that is because you're not having a normal commute. If you need to, go to the doctor's office every Tuesday, well, that's not,
Right.
something that the insurance is going to look at. And if you're going to, just go to the grocery store or whatever it is, as long as there is not something that, okay, the
Is it
insurance,
under a certain number of miles?
it is. So I wouldn't even say it's under a certain amount of miles. If we get into that, we can. But I'd like to simply ask the question, are you retired? Are you working? Is there any commute that you're making
On a regular
regular
basis.
basis? And,
Okay.
you could be a pleasure use driver and still drive to Florida with your car. And
Yeah, and you're
once a
putting a
year,
couple few miles on
you're
it for that
definitely
trip.
putting a lot on, but you're not a day-to-day drive to
Right.
work or a business use driver. So it's not a
Right.
different policy, but when going on to these different policy, the
Well, and
different
this is
ratings.
important. This is important for all of us to know. And that's why you're here today, because I don't think anyone looks at exactly how much their liability is in comparison to what their assets are.
And that
And
is
I
what
also don't think they're thinking about, how far and short they're driving. You're listening to Next Steps for Seniors, Conversations on Aging. We're going to be back in just a moment.